Hello, we're gonna start chapter 10. We're gonna talk about lump sum purchase. When you purchase a group of assets and you pay a single amount. So we have this question: fully distribution service paid 130,000 for a group purchase of land. So this is the single price that I paid for the group of assets. A group purchase of land, building, equipment. So I purchased 3 assets. At the time of the acquisition, the land had a market value of 70,000, the building 42,000, and the equipment 28,000. Journalize the lump sum purchase of the 3 assets for a total cost of 130,000. The amount for which the business signed a note payable. Okay. So he said paid. Okay, then he said it's a note payable. Okay, so he didn't pay cash. He signed a note payable. Okay. Now, to record the journal at the acquisition date, I need to debit 3 assets, which are land, building, and equipment. Okay, while on the credit side, you can credit cash if you paid cash, or you can credit notes payable for the 130,000. Now, you need to decide what is the amount assigned to each asset. Okay, so I paid 130,000 for the 3 assets: land, building, and equipment. Okay, now we have the market value for the land 70,000, for the building 42,000, for the equipment it's 28,000. If we add them up, I'm gonna get 140,000, not 130,000. So my entry will not be balanced, because on the debit side I have 3 assets. The total cost for them is 140,000, while on the credit side I have 130,000. Okay, so what shall I do? I need to find the allocated amount or the assigned amount out of the 130. So we're gonna decide how we assign the 130,000 to each asset based on the relative market value. So how can we do that? Let's see. The land market value is 70,000. The building market value is 42,000. And the equipment is 28,000. So again, if we add them up, the total will be 140,000. So what shall we do? I need to find the percentage. I need to divide each one by the total. So 70,000 divided by 140, it's gonna be 50%. Then 42 divided by 140, it's gonna be 30%. Then 28 divided by 140, it's gonna be 20%. Okay, so the total should be 100%. Now we're gonna multiply those percentages with the lump sum price, which is the 130,000. So I need to multiply each one with the 130,000 to find the assigned cost based on the relative market value. So 50% times 130, it's going to be 65. 30% times 130, it's going to be 39. And last one, 20% times 130, it's going to be 26. So now to double check, I need to add them up, and the total should be 130,000. 65 plus 39 plus 26. It's 130,000. And this is the assigned cost. Okay, so now in the debit side, the value for the land will be 65,000. For the building, it's 39. For the equipment, it's 26. And on the credit side, either you're gonna credit cash or you're gonna credit notes payable. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.